Hi, I'm Terrell Turner, the host of the Business Talk Library show. And today we have a great guest on because one of the things that a lot of business owners get to is at some point you get pretty good profitability, pretty stable cash flow in your business, and you're looking for other options of where can I invest this if I don't want to look at the stock market, I don't really understand crypto. But one of the things that has been a phenomenal resource for a lot of business owners is when it comes down to real estate being a viable option. And so today we have another guest on, and I want to talk about the great things that he's doing and really helping create options for himself, as well as being able to create options through the deals for other potential investors as well. So welcome to the show, Simon. How are you?
Hey, Terrell. I'm doing great. And thanks for the opportunity to come on your show. And I think I mentioned to you before, I've been listening to your podcast, and I always find value in the content, the people that you interview. And, there's so many different, topics, from marketing and leadership. And so I just hope I'm able to bring some value to your subscribers as well.
Well, thank you for being a listener and a watcher of the show. And it's always good to get that feedback because, I think, as a business owner and as a content creator, one of the things we always try to make sure is that, we're providing something that people actually want. So thanks for the feedback.
Yeah, absolutely.
So now, before we jump into some of the details of talking about, like I said, your amazing real estate business, can you tell us a little bit about, your background?
Yeah, so I've been fortunate to have been a real estate investor for 17 years now, and my journey started with single family homes. I will always remember my first single family investment that I purchased. I was working a 9 to 5 job, and at the end of the day, 6 o'clock, I grab a quick dinner, go to the house and start working on it. And I did all the work on that house myself. Now, it was backbreaking work. I mean, I was on my hands and knees, redoing floors. I was painting, doing drywall. Learned a lot. And probably for me, one of the biggest lessons was, my time is valuable. And, back then, I missed out on a lot of, family time, dinners. My son was like 2 years old. So, I was missing time with him. But that's really, that's kind of where my journey started. And looking back, I probably, even knowing everything I know now, wouldn't change anything just because of all the things I learned, along the way. So over that period of time, I realized that buying single family homes is not going to scale to the point that I needed it to. And, my desire is not to retire early, or, this isn't about, getting rich or anything like that. It's about making work optional. So, I still have a W-2 job, but I'd like for it to be an option for me to continue working or not continue working, or if something happened to the job or whatever the case is, I'd like to have the option and the ability the flexibility, to be okay and to maintain my standard of living. So, that's kind of brought me to where I'm at now. And I started investing in multifamily about a year ago, and have really scaled from being a passive investor now to being an active general partner, in some deals. So that's kind of where my journey is going now.
Nice. One of the things I will say, going back to we talked about, buying the single family and doing the work yourself. Like I extremely applaud you for that. I think I remember when my wife and I bought our first house, where a lot of the work had been done, but like there was some stuff we had to redo, like, like the shower, like in the main master bathroom, the shower floor had to be redone because it wasn't sloped right to the drain. And I remember like being on my hands and knees and doing that small project to where I'm just like, I can't imagine doing a major renovation like that. So how long did it take you to get through all the work, since you were working in the daytime and then working in the evening? Like, how long did that first project take you?
It took me, I want to say about 3 months, if I remember right. Right around 3 months. And in my mind, I'm saving all this money from not having to pay contractors and things like that. But looking back now, it it probably cost me way more in the time than if I had just, paid someone who knew what they were doing, because I was having to figure stuff out as I went along. And so if I just paid someone and they had to come in, it would have saved me so much time. So again, lesson learned, but, and I wouldn't trade some of those lessons for anything, because, looking back now, it was backbreaking hard work, but it was, it was well worth it. So.
Gotcha. Now, did you learn a lot of it from like watching like YouTube, or just like asking people, or how did you learn a lot of that stuff?
I was fortunate, renovations. So my first property, I stayed away from having to do anything really structural. So it was really just a lot of cosmetic. The floors were a mess. Now they were hardwood floors, but they were, they didn't look very nice, to put it nicely. So I had to refinish those floors, and it was, that was probably the hardest part, was refinishing those wood floors. And they came out great, but a lot of the other work, kind of, fixing drywall and things like that, I just kind of learned as like you said, YouTube, and then trying to practice it on my own. The first couple of patch jobs I did didn't look very good, but I got better. So yeah, it was kind of learn as you go.
Gotcha. Now, one of the things that I think is also pretty interesting is, when I talk to some people that are, into investing in real estate, they may have started maybe, 3 years ago, 2 years ago, they just got into it. But, having done it for 17 years, I mean, from your perspective, have you seen a lot change as far as like the type of people who went into real estate investing 17 years ago compared to now?
Yeah, well, from my perspective, a lot of the people that started investing in real estate about the same time that I did have fallen off. So for whatever reason, the people that stuck with it were the ones that were really buying properties for cash flow, and buying them at discounted prices. So so the properties needed work, right? They needed work, so you got them at a better than market price. And once you finished the renovations and put a tenant in them, they were cash flowing. The people that got into trouble, and a lot of people fell off, around that 2008, 2009 mark, with the recession. A lot of those people were speculating. And for me, speculating is when you buy a property and you hope that you can renovate it and turn it around and sell it, within, 3 to 6 months or something. A lot of those people were caught holding a bag, holding a property when the recession hit, and then they couldn't get rid of it, and they had debt on it, and then it was foreclosed on, because they couldn't maintain it. So unfortunately, a lot of people, that kind of hit people hard, and that really shook out a lot of those investors, out of the market at that point.
Mm-hmm. And I think that's an interesting thing when, I look at that a lot from just a business perspective. I mean, my background is accounting and finance, is just seeing people go into an idea of a business more so with the high hopes of being able to flip it at some point. Like, hey, it's going to be worth more, I can flip it. But it's like, when you start to look at it operationally, you look at some of the nuts and bolts, like you said, the cash flow, and your expenses, just like you guys are upside down. Like, if you don't flip this, then you're going to be holding a bad deal. So when it comes down to real estate for yourself, and as far as looking at properties and stuff, do you usually aim for ones that have like, high valuation? Do you look for kind of operationally like cash flow, or how do you start to think about the deals or the potential deals that you look at?
It all starts with cash flow. So that, to me, that's the biggest thing, because real estate can be cyclical. I mean, there will be ups and downs in real estate and the price of real estate. But as long as the asset is generating cash flow, that helps to kind of even out the ups and downs of the market. So if you're generating cash flow and there's a down market, well, the rents aren't necessarily going to change. You know, and as far as I can remember in my 17 years, I've never lowered the rent on a property. Maybe it stayed the same, you know, over a year over year basis, but I've never actually lowered it. So if you're generating that cash flow, that's the cushion that kind of gets you through those different, you know, market cycles, and you know, really kind of provides you with a safety net. And then appreciation's next, you know, because if you hold on to real estate long enough, it's going to appreciate, because there's only so much land, you know, on this earth, you know, that can be purchased. So if you have the cash flow and there's a down market, you can hold on to the property, get through it, and then when the economic times change, then you can you know, sell it if you wanted to or needed to. Without that cash flow, and say there's an economic downturn, again, you're going to be left, you know, holding a property that's one, is not profitable, and then two, you're going to have trouble making the mortgage payment, the insurance, the real estate taxes, and everything else associated with it.
Gotcha. Now, one of the things you talked about was, you know, at some point in your journey, you know, you started kind of looking at multifamily. You know, were there any like kind of driving situations or things that caused you to kind of shift your attention to say, hey, you know, we've been doing the single family for a while, let me take a look at multifamily?
Yeah, that's a really great question. And for real estate investors, it seems like you reach a point when you're buying single family homes when you realize like you only have so much capital to deploy, and you can only make so many down payments. You can only pay for so many renovations before you run out of money. And you're going to run out of money before you get to a point with your portfolio that you are, you know, at where you've met your goals. And like I mentioned earlier, my goal would be to make, you know, my W-2 job optional. And I wasn't going to have enough capital to get there. So multifamily was the vehicle that I discovered that could get me there because of the scale. You know, when you think multifamily, you know, I'm not talking about duplexes or fourplexes. We're talking about, you know, 100 unit or more, you know, apartment buildings, and the scale at which you can get involved in multifamily can really help you accomplish your financial goals, whether they be, you know, retirement, you know, building wealth, making a W-2 job optional, you know, just so many different things that you can accomplish because of the scale involved with multifamily.
Nice. Now, when people hear the term, you know, like multifamily, and they're thinking, you know, 100-unit properties, you know, some people are asking a question like, okay, all right, you know, I'm not a multi-billionaire, or I'm not a multi-millionaire. It's like, how can any of those type of deals be something that I could get into?
You know, those are the same questions I had. Like, I was thinking the same thing. I would hear people talking about investing in multifamily. I'm like, you know, I'm trying to scrape up enough money to put a down payment on a single family house. You know, how am I going to invest in this 100-unit apartment building? And you know, it was a couple of years ago. You know, in San Antonio, where I live, prices in real estate were just, it was such a hot market. Like, I'm doing analysis on properties and nothing made sense. Like, even if I'm putting 25% down, you know, you're talking about a cash on cash return of like less than 2%. So it just didn't make sense. And I'm like, what can I do? So I started going to meetups, you know, real estate meetups, local, you know, here in San Antonio. And I started hearing people talking about it. You know, we would get up and introduce ourselves, and the guy next to me gets up and, you know, he's wearing these old jeans and t-shirt, and he's like, yeah, I just closed on a 200-unit, you know, multifamily deal. And I'm like, what is this guy doing that I'm not? What, you know? And just through connections and networking at these meetups, I started to hear more, and they introduced me to passive investing in multifamily deals, where I could, as a limited partner, I could, you know, put money into a deal that would go off and buy these, you know, apartment buildings. And, you know, my mind just kind of blew up. I was like, what in the world? Where has this come from? Where has this been? You know, 17 years that I've been buying single family homes, and, you know, just, I wish I had learned about it so much sooner. But like I said, you know, your journey is unique, and you learn so much along the way. So I'm here for a reason. I'm here where I'm at for a reason. So once I found out about it, I got in touch with a general partner here in San Antonio who I was recommended to, and I met him for lunch, and we talked about a deal that he had, and he's like, here it is. We walked through the offering memo, and I was ready to hand him a check right there and then. I'm like, how can I get into this deal? I want to make sure I'm in this deal. What do I got to do? And so that's kind of how I got into multifamily. I started at that point investing passively as a limited partner in these deals.
Nice. It's always interesting when, you have like some of those moments where, like you said, I could just, envision it where you're sitting there, person next to you gets up and says, hey, I just invested in 200 unit. And it's just like, well, what are you doing that I'm not doing? Like, did he really just say 200?
Yeah, it was, literally my mind just kind of exploded. I'm like, and so my turn comes up and I get up and I'm like, I've got 12 single family homes.
Well, awesome. Now, when it comes down to being a limited partner for business owners that don't quite understand, I think it'll be good to talk a little bit more about like what that means of being a limited partner, because one of the concerns that a lot of business owners that listen to this show, or just business owners in general, it's like, hey, I feel like I'm already at capacity running my current business. So would I even have time? Like, what are some of the commitments of a limited? What can some of the commitments be for a limited passive investor?
Yeah, great question. And I'll break it down in a couple of ways. As a limited partner, you're invested in the deal, in the purchase of a multifamily building, and you are an actual owner. So you can go to the property, you can go on tours, you can see it, feel it, touch it. So you get all the benefits of being a real estate owner. You take part in the cash flow, you take part in the appreciation. And you get all the tax benefits, the depreciation and write-offs that come with owning real estate, without having to deal with the day-to-day management, without having to deal with tenants, without having to deal with calls in the middle of the night, when things break or anything like that. So in that respect, it's totally passive. But you have to do some of your homework on the front end in order to vet the partnership team, vet the deal. So there's a little bit of work on the front end. You got to do your due diligence to make sure that the people you're partnering with on this deal, have the experience, have the knowledge. They've done some of these types of transactions, and you trust them, because these are long-term partnerships that you're forming. Most of these deals take 5, 6, 7 years to turn them around. So that's a long time to be partnered with someone that if you don't trust them.
Now, for a deal like that, when you mention about 5, 6, maybe 7+ years to turn the deal around, is it that the limited partners invest today, and over that time frame or whatever, do they sell it off, or do they do some type of exit payout in that time frame?
Yes. So typically the way that deals are structured, and the way that I like to see them structured for my investors, is we pay out a what we call a preferred return. Typically, our deals will have a 7% preferred return, and preferred return does not mean that you're guaranteed that amount, but it means that you're going to get paid before any of the general partnership team is paid. So let me take a step back. We've been talking about limited partners who invest in the deal. The general partners are the ones who put the deal together and then execute the business plan over the life of the transaction. So, 7% preferred return, cash on cash, is typically how we structure it. Then there's the appreciation on the back end. So over the time that we're holding this asset, we're adding value to it. We're renovating units. We're adding, maybe a dog park or a playground, amenities, things that we can then use to raise the operating income at the asset. And by doing so, we raise the value of the asset. So, and that's why typically I'm saying, a hold period is going to be about 5 years or so, because it takes time to renovate units, to build these types of amenities, and to turn some of the tenants around and generate the additional income. But when the asset is sold, then the limited partners again get their share of the appreciation. And typically, the way that we structure the deals is going to be 70% to the limited partners, and then 30% to the general partners. So again, the limited partners get a bulk of the appreciation that they get to participate in.
Awesome. So now, when it comes down to the types of deals that your company really looks after, do you have kind of a target profile that you guys kind of aim for?
Yeah, I would say our target profile is, again, 100 plus units. We're looking for what we call Class B type properties, and Class B is your probably 1980 or above vintage units. So they were built, 1980 or since then. Class A would be probably built mid 2000s and above. So, we have that little sweet spot there where from 1980 to about 1995 or so, those are the units, those are the apartments that we find we can really go in and add some value in, because especially the ones that have been neglected, still have some of that 1980s type, carpet or wallpaper, stuff like that. That's really easy for us to go in and renovate. It's just a matter of, putting in some wood type flooring, taking down wallpaper, painting, adding some new cabinets. Those are easy ways to add, a really modern touch to some of these units. So those are, and the what we try to stay away from is structure issues. So, if there's a lot of foundational type issues, probably don't want to mess with that, because you never know what else you're going to discover once you start working on those types of buildings. But our business plans are typically renovate, add amenities, and then operate the apartment much more efficiently than what the previous management team was doing. And those three things can add a lot of value to these assets.
Awesome. So if people are interested in checking out some of the deals you guys may have in the works or projects that you guys have been involved in, where's the best place for them to find you online?
Yeah, so my website, sastexascapital.com. We have educational materials. I even put together a little white paper on the 7 best reasons to invest in multifamily. We also have samples of previous deals on our website. And then if you sign up for the white paper, you also get put onto our investor mailing list. So anytime that we have investment opportunities that come up, you'll be one of the first ones to know about it.
Awesome. Well, before we wrap up, one question that I love asking every guest that comes on is, when you think back to your journey that you've been on and where you are now, what's 2 lessons that you would share with other people who are looking to invest in real estate? And it could be something you've already said that you want to reiterate, or it could be 2 new things.
Yeah, that's such a good question. One, I would say is I'm big on having mentors and coaches, and being around people who are like-minded. So for me, one thing is if you can find a mentor, in real estate, or really, in anything in business, as you probably well know, for me, a mentor or a coach acts as an accelerator. So yeah, you can probably figure some of this stuff out. It might take you a couple of years, 2-3 years, and you can probably do it on your own. But if you really want to scale, and if you really want to, move fast, a mentor or a coach just acts as an accelerator. And probably hand in hand with that, the other thing is just education. Reading books, read materials, find blogs, YouTube. Your podcast is a great resource. Education is so huge. And I talk to a lot of people who want to get started in real estate and have no idea where. Well, listening to podcasts is a great place to start. There's thousands of real estate books, but take action. Just get started, get educated. Meetups. Again, I had a great experience with meetups, and they helped me get to where I'm at. So, mentors, coaches, and education. I mean, that's where you get started.
Awesome. Well, Simon, thank you so much for being an amazing guest on the show today. Thank you for tuning in to the Business Talk Library. If you like our content, be sure to follow us on social media. And if you want to see more of our exclusive content, you can subscribe and become a member on patreon.com/Business Talk Library. Hey, the Business Talk Library is the place where business makes sense.